Hey all, Ira Epstein of Linn Associates, and I'm back. It is Monday, and this is the 30th of December, 2019, the last full trading day of the month. Now, there's a lot going on, but there always is at year-end. There's squaring up of books and so on. The big news that I'm looking for is what's in the U.S.-Chinese trade deal, because we're talking agriculture here, and you can see the beans were up, the cotton market was up, everything else pretty much standing still. A little bit of a decline in the energy markets today. The stock market, if you're trying to read into the last full day of trading and tomorrow just a partial day, I think you're wasting your time. Don't even bother with that. Let the market and everybody make their predictions for 2020. They have enough trouble day to day, and now they're going to look a year ahead. And I crack up when I watch financial TV. I guess it's because I've got this gray hair and I've been around this so long. But what we look for is word came out today that the Vice Premier Liu is flying into the United States to sign the U.S.-Chinese trade deal, phase one. I still don't know what it entails. I mean, we've heard about the $40 to $50 billion. We've heard they're going to buy more agriculture products. Okay, but what are they going to do? How are they going to get to those numbers? What does it all entail? We're going to find out possibly right after the first of the year. I don't know that the man will be here for New Year's Eve or New Year's Day, but certainly they're saying this week he is flying in. So when I look at the weekly chart of beans, as much as we've heard how the farmers are in a problem, if you take a look at the market and you really look at it, we're back to the high prices as to where the year began. This is December 2019. Just look across the chart. So farmers, I do understand, but I do also understand those of you that held on, you know worse off than you were here, but obviously it's not back to the 1060 level. Is that out of the realm of reality? Well, we'll find out, because I don't know what the U.S.-Chinese trade deal is all about yet. What I can tell you is what a phenomenal move in December. You've gone from roughly the low 880s all the way up to 952, so it's a 70-cent rally a bushel, and that's a daily bar chart. When I put the swing line study on it, you can see how they have just been having a pattern of higher lows and higher highs. And yes, you should pay attention to those patterns, and if you don't understand them, start learning about them, because traders talk about them. And what you want to be, if you'll remember that old Merrill Lynch ad where you had the herd running through the streets. Well, you want to be in the herd, because the herd drives how the market goes. And no, I can't tell you that the market is topping out here or not. Nobody knows that. You know that after the fact. But at this point, unless the market takes out 937 and a quarter, the pattern of higher lows, higher highs is in place. If you look at Friday's action, you had an outside day down. Today you went through that high. So the market did what I call springing a bear trap. And my theory is that when the market takes out the high of an outside day down, I look to see where other key numbers are. Now let's get into those. First off, we had a bullish crossover of the 18-day average over the 100. That is generally a bull pattern. And the market reversed on that day, and today it trapped those people as the market's now gone up already to make the higher high. So that's number one. It's accomplished the first part. It's making a higher high. I look to see where a Bollinger Band is, and it's up here at 963. So one of my targets is that number. Why? When you capture this group of people, and that is from Friday, and it encompassed almost the whole week of trading, not quite, but most of it. If they're going to buy their way out, I look to see where either a key moving average over the market is or the upper Bollinger Band. Now, what would throw that in disarray would be going back through Friday's low. So you don't want to see that done, but as long as that's not done, and you keep this embedded slow stochastic reading, the bulls are in control. When you lose the red line under 80, I'll say, it's time for a market correction, and maybe the market makes a run back here. The meal market is not the leader of this parade. It is the soy oil, and that's what the Chinese are in dire need of. Part of it has to do with how much crush they're doing. Part of it has to do with the African swine fever. We've been writing about it in the Linn Research for time on end now for several months since this African swine fever, and I will give the firm here a lot of credit. They pinpointed that it was going to be oil, not meal, that led the beans back up, and so far, if you look at the meal market, that's been the case. You have lower highs, lower lows. That's a downtrend. All the market did today is rally back to the 18-day average of closes. It stopped there, and momentum is still pointing down, as is bias. The powerhouse is in the soy oil. Like the beans, it's got the embedded reading. Unlike the beans, it's really been the leader. And both of them bottomed out in December, but it's oil that's been the demand market here. And if the market wants to run, why not 3,600 zone, back up to that upper Bollinger Band or higher? You'd have to take out 3380 to break this trend that's going on. And I think if it did that, you'd lose the embedded reading. But at best, it's a guess on my part. In the corn market, it's the 100-day average that is giving the market fits. The market has been able to rally up to it, but it keeps failing against that number. Now the question is, what's next? My eye goes to the embedded reading here. So you've got both numbers over 80. You've got them both over 80 on Friday, both over 80 on Thursday, and both were over 80 on Tuesday. And you know I was gone last week. So you have your embedded reading. This means the market is looking for support zones. Until the red line closes under 80, the bulls have control. And it's dangerous trying to figure out, are you going to be short corn in any manner in front of this U.S.-Chinese trade deal? So I think the bears have basically thrown in the towel. Before I left, we talked that the market had made probably the harvest lows. Well, looking back, that was a pretty good call. In the wheat market, the same thing. You made it in November period here. Right here was the lows. And look how the 100-day average held that market. One of the things you have to learn this year for yourself, I think, is learning what moving averages are about, where they come in, different ones that sector it out. For those of you that took advantage of my charting course offer, I think it's a good time for you over this holiday period right now to start learning about some of those. But all that we did while I was out of town is the market was, number one, without a trend. You had a lower low, higher high. The bias was up. Momentum was flat, and this was last Thursday. I was gone at that point for the Christmas holiday. You rallied up on Friday to the upper Bollinger Band, and that's what you're doing. You're pushing on that band, and you're running into resistance against it. In the sugar market, the trend has been higher lows with a higher high. Now, we had the market lose back here, its embedded reading, and drift down. I spotted on early and I said, you got to be a bit careful here. This market doesn't act like a market that wants to make a run to that 18-day average. And if it does, because when you lose the embedded reading, I say the market owes hitting it again, it could be at a level that for the bears would be even higher. So far, this market's not shown any problems in it. Closing or getting under the first 1336 and then closing under 1339 could be a problem for the market where it wants to get more of a correction. In the coffee market, the pattern is one of a lower low and a higher high. What else do you see on the chart? Notice this 18-day average. How many days have you hit it now? Almost what, a week and a half? The market's looking for where the direction's going to come in. And as it's doing it, it's been narrowing in the Bollinger Bands. Momentum flat, I'm going to call this market neutral. In the cocoa market, you lost a downtrend. When I had left town, you had an embedded reading. That's the first thing to look at. You see that right through here. Both numbers are under 20 in the slow stochastic, and they were that way for several days in a row. If you take out this high, and that high specifically was on Tuesday, the 24th, and it was at 24.50. If the market takes that out and you lose an embedded reading, well, you're out of the downtrend. Then you're looking for a possible challenge of the 18-day average. Market hasn't done it yet, but it wouldn't surprise me if it does. So it seems to be fighting with resistance at that 18-day average, support at the 100, and it's void of what? While the momentum is up via the the swing line, the bias is down and you've lost the embedded reading. In the cocoa market, as long as you have an embedded bullish reading in the slow stochastic. What am I? I'm friendly, bullish. What else? The bias has been up since you crossed over the 18-day average at the beginning of December. The trend is up because you've got higher lows, higher highs, with possible resistance again at the upper Bollinger Band. Each time it's hit it, it pushes on it, but it's not able to get very far. In the cattle market, momentum went flat. Now, the seasonal to the upside ended yet on the 28th. That does not mean this market has to break, but you're going sideways in this pattern. You had a run towards that number and you didn't follow through. I'm a little bothered by that, but not bearish in any manner. I still see the higher lows, higher highs, but I wouldn't be surprised if you get a bunch of profit taking as we have a shortened trading day tomorrow. Feeder cattle market, higher lows, lower highs. Do you see that right through there? And momentum trying to turn down. This market is starting to go sideways. Can it regain a full-fledged uptrend? Sure. Take out Friday's high of 145.45, not taking out 143.27 first. You'd have higher lows, higher highs, putting into play the potential of the upper band. But I'll be watching stochastics. They're starting to, if you will, get away from what the market is trying to accomplish. In the hog market, well, my eye goes right here. How many days do we have over the 80 reading? Certainly today, we had on Friday that day, and we had it on Thursday. So until that's lost, I contend that breaks in the market are going to be well supported, but the resistance is pretty formidable between the 100-day average of, let's call it 7207.5, and today's high was 7190, up to the upper Bollinger Band of 7236. My problem, and your problem should be, do you really want to play this game of trying to guess what China's going to do or not do and what the U.S. has agreed to? I'll let you do that. I'll wait and see what the deal is and then look at it. One of the things I keep talking about is our research at this firm. And the reason is we're a commodity firm that caters to commercial traders, speculators, options traders. We're helping people in the game, and I think you'll find that if you look at our information, the way it's written for the commodity market's quite interesting. We're able to tell you because we have people still monitoring all the electronic markets and the pits that are still open downstairs. What are the pros doing? Who's buying what? What are the commercials doing in the market? And we cover it in most of these sectors, in fact, all of these sectors. So we break it down. The financial markets will include the metals, the currency markets, the S&P, and I do a lot of writing on that, as well as a lot of writing for those of you that are my subscribers on what else is going on here. So if you haven't seen our information, it's probably a good way to start the New Year's off by taking a look at it. How do you get it? It's free. We'd like to give it to you. All you need to do is call my staff at this number. You can go to our website under free offers. We'll be happy to put that in your hand as well. You can always click right up here. If you're watching me on YouTube, it'll take you right to our free offer page. With that, I'm Ira Epstein. It's good to be back. I wish you all, if you don't see me tomorrow, a Happy New Year. I will be here, and I will be putting out my regular reviews for you. Then obviously, New Year's Day, everybody's off, and then I'll be back on Thursday. So you have a good one. Thanks for watching, and Happy New Year.